Hi, everyone. Welcome to our podcast. Today, we're going to learn all about investment banking and pronunciation in Spanish. So I want to introduce to you Andre Ulloa, and he is Managing Director of M&A Healthcare Advisors. And the first thing, Andre, we just got through giggling about this. My wife is Colombian, and so I'm trying to pronounce it the Colombian way. But how do you pronounce your name and why?
Well, it's Ulloa.
Yep.
The Colombians, by the way, speak the best Spanish of all Latin America.
Yep.
They're credited for that. And so, yeah, you better get it right because
Yep.
she'll get on you if you don't. Yeah, you mentioned she came from Medellin, and uh, she must be very heartbroken about the result of the Copa America.
Yeah, they're sad. We're celebrating her birthday on that day too.
Oh
So
no! Oh
it's her
no!
birthday. So this year her birthday is on Bastille Day. So the July 14th, I think is when the game was on the same day. So it's kind of a mixed feelings. But yeah, so like I would have said Ujoa in like the Colombian version. So it's like trying to go backwards to the AJ versus AA. It's like the whole thing. So those of you that know Spanish get what we're talking about. And the other thing is those of you know anything about Spanish, like every country has its own take on it, even regions within Spain. I have a funny video, by the way, Andre, I could send you about that, where guys doing different accents from different parts of the world. It's pretty funny.
That'd be
So anyway,
great. Yeah, I mean, you can get into trouble. I spent quite a bit of time in Latin America, a lot of time in Argentina, and quite a bit of time in Spain. And it's interesting because there's also terms that they use in one country versus another where it'll mean something pretty explicit in one place, and it'll be completely innocent somewhere else. And
that,
so, yeah,
I
it's a
can.
very diverse language, like it's people.
And it's funny you mentioned Argentina. So I don't know if it's just regional in Argentina, but some of them have that Italian accent. It's like da 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 da. It's like so. It's like they're speaking Spanish, but it sounds like Italian if you're not listening carefully. So it's pretty funny.
I, I was there in Argentina before in 99, 2000. And there was a president, Menem. He wasn't particularly a great guy, but the dollar was 1 for 1 in Argentina. And I was so impressed by how it felt like a European town, right? I mean, it was just, it had the way it was organized. There was an obelisk, and it was just so well taken care of. I felt like if you really squinted, you felt like you were in Paris in some places. And they had such a huge emphasis on the arts, and their food and everything else. So it's Latin America is so immensely diverse, and I think people are discovering that now. They're going down there, they're visiting, and it's interesting too because we're going to get into this, but our broker dealer. So we're an investment bank, but our broker dealer is headquartered in Buenos Aires. And so it's interesting that like there's this very big relationship that we have now with Latin America that we don't hear so much about. My family in Miami it's basically Miami's Latin America of the
Yeah, for sure.
North, right? I mean you've got I mean it was Havana of the North for a while, but now it's become sort of the hub for all Latin American activity. But the capital coming in there from Latin America, there's just a lot of folks who want to invest here. The dollar is still strong, and it's much stronger than their own currencies. And so we see a lot of capital coming from there, from places like Argentina and Colombia. Quite a bit from Colombia too, by the way.
That's cool. I wish we had time to talk about Miami. It is a very unique city for so many ways, but we don't have
This
time.
podcast could be all about this, by the way. I just want you to know, like,
No, it's like it's
I love it there too. We just got
yeah,
back. I can only take my wife. That's a prerequisite, by the
yeah,
way.
yeah, for
Funny
sure.
story. I took her there because I wanted to relocate there. I grew up there, and I wanted to relocate there. We're in Los Angeles now, and for a variety of reasons, it made more sense to go to Florida. She grew up here, but when we got there, like I made the mistake of taking her in the summer, and the humidity hit her first of all, and then we went to South Beach, and then she saw all the women walking around. She's like, "This is not for us. This is not gonna."
That's so
She's
funny. That's
Greek
so,
and gorgeous and all that, and she's like, "I don't need this. I don't need this in my life."
that's so funny. Last time I was in Miami, I'd forgotten how beautiful the ocean is there. I've been there.
Oh
I
yeah.
was skiing a while ago, and then also actually in some international travel, I went there. It's like, wow. We used to always be north of that in like Fort Lauderdale area, and then when I was a kid. It was like, wow, this water is spectacular. It is really nice there. So, okay,
It's
back to business. So
okay.
the
Back to business. Sorry. Okay, go
yeah,
ahead. Go
so
ahead. You
like,
digress.
'cause I could talk about this the whole time. If we had more time, I would do it. Andre, I'm really excited to have you on the call. In the world that I play in today, and my team plays in, we work with lots of people in private equity. We work with lots of larger businesses that are thinking about having an event at some point. So we see both sides of this. We certainly, investment bankers are a big part of that landscape as well. And so, Andre, you and I talked offline. The audience today includes pretty broad mixture. We have people that are listening to us and our clients from multi-location practices. They can be either still doctor owned or private equity owned. We have manufacturers, pharma, telehealth entrepreneurs. It's really a broad range of people. And so I think we could assume in our audience today, there'll be among the people that own companies, some of them are new to, they've never done a transaction. They're working towards building one. Others have done, multiple transactions. They're pretty savvy. So it's a pretty broad discussion today. But I think it'd be really helpful if you introduced yourself, your firm, and, talk about the landscape of like what even an investment banker is compared to a business broker. Some sort of 101 talk to get us started. And we can talk about some other issues once we get into it.
Yeah, no, it's good. I look, as you know, we deal with folks who are extremely sophisticated when it comes to their operations, and have credentials and education, as long as your arm. But there is a sort of a misunderstanding around financial markets and the operators within those markets. And as you mentioned, our firm, M&A Healthcare Advisors, is an investment bank. That's how we're credentialed, as opposed to what other categories of non-credentialed financial representation, starting probably from a business broker on the lower end, up to a finder is another category, up to an M&A advisor, right? And look, you can have an M&A advisor and an investment bank, and they can work together, but that's the level that we're on. And the distinction really is that a business broker would be someone that has a real estate license, is registered within the state under the real estate brokerage, sort of regulatory bodies, and they can go out there and sell the businesses usually that are attached to the real estate that they represent, right? So, the idea here is that, hey, look, I'm selling this, laundromat, right? I'm selling the real estate associated with it. Well, I could also represent the business owner within that business, right? And so business brokerage could get a little bit bigger than that. Obviously, real estate is quite large, and real estate is a huge component of healthcare, but we leave that for the commercial brokers that we work with. We want to represent larger sized, smaller businesses, so what we call the lower middle market. And as an investment bank that focuses on M&A advisory, what we want to do is handle every aspect of a capital raise or a transaction, and what we're allowed to do within compliance. So we have registered with the SEC and their regulatory body, which is called FINRA, and we handle any type of transaction that you might be limited from doing in those other categories. So a transaction such as a securities transaction where you're raising capital for equity of the business, that's something that we're firmly in compliance and we're allowed to do. On top of the fact that, with our credentialing and everything we've done and our experience, we also understand the capital markets very well. So we're able to lean on resources to do minority interest raises, or if someone wants to go out there and recapitalize their business, we can look at debt as a component of the transaction. Look, not to get it too complicated, Stuart. At the end of the day, what somebody wants to do when they call us is they want to get money, right? They want to raise capital. They want to make something on their life's work for their business. And we have all ages and stages of ownership that come to us and say, we want to we want to sell our business, or we want this outcome on the business, and we walk them through that and say, okay, well, in order to get there, let's talk through what needs to be done right now and what we're going to do, who we're going to target as potential acquirers or investors on your business. You know, do you want to remain involved? Do you not want to remain involved? What's the sort of the 5-year projection on all this? And we can put that all together in a plan for them, and we are firmly in compliance to do that with the regulators. And one more thing I'll say is that, you know, when we execute on a deal, right, and when we make this plan with somebody, we're there every step of the way with them. So, you know, we love getting those calls from folks that are like, well, I'm not thinking, I don't really want to sell right now, but I'd like to understand what it might entail for us to do that. And we can get those types of owners ready for what the transaction will entail. And we'll walk through, okay, look, operationally, this is where we want to be. Here are some of the milestones we'll want to hit with this business in order for us to get these premium valuations. So we can do a lot of consultation work with them to get them ready for the sale, then go through the transaction, and then ultimately get them to a successful outcome. And we just want that's the holistic approach we can take. And we're both, you know, in compliance, and we have the qualifications to do that.
That makes sense. And so this landscape that you're in, there's you guys, the name of your firm, M&A Healthcare Advisors. How much, as you know, what is the advantage of working with somebody who's an investment banker with a niche focus compared to just any investment banker or business broker or whomever? I'm assuming there's a lot of advantages that you can tell me.
Yeah, look, I'll say, and you know, we're in a competitive landscape with other finders and other M&A advisory groups out there. And I'll say that you know, and there's also those that are squarely focused on healthcare businesses as well, right? So that's not the differentiator from our perspective. The real differentiator is that, let's say that you're a finder, okay? And that is literally a technical term. And there's actually an SEC no action letter, which says that if you do a deal in this, you know, construct, then we won't scrutinize it in any way, right? It's sort of like saying, we understand that you exist in the gray area as a finder, but we're not gonna touch you if you do deals. But the thing is that the confines are pretty strict. Like, you can't create a listing site, like you can't list offers, like you can't do like an MLS or like a real estate type listing site for deals. You can't value the businesses. If you get into a securities transaction, it gets a little tricky, like in terms of what the regulations are. And so what we provide from that standpoint is a level of security around the transaction if it goes in a direction that isn't allowed by the SEC. And so, you know, you just don't want to put yourself in a position where, oh, well, gosh, you know, we're selling for a certain amount of money, and now we fall out of the bounds of the no action letter. So, you know, I look at it from a regulatory standpoint a lot more these days than I would have 5 years ago. 5 years ago, you know, we didn't have the kind of scrutiny we have from the regulators that we do today. And I would say that's for every industry, right? So our industry is actually financial services, right? Or the finance, you know, business. But when you talk about healthcare, I think that's something that'll resonate with your audience, is that you think about healthcare and the amount of regulatory oversight that's just occurred in the last 2 years. And the fact that, you know, the government is, you know, really coming after businesses that, you know, aren't doing anything wrong per se, but might have some breaches in their healthcare laws that are so innocent, but still it allows the government to come in and open up the books and start to get recoupments on reimbursements and things like that. Well, we said, look, we need to not have to worry about that from a financial perspective. Like, if we go into a transaction and all of a sudden the SEC comes knocking on the door for some reason, we want to be able to protect ourselves. And that was number one. So that's a huge distinction now between us and a broker, business broker, and a finder, right? And sort of a non-credentialed M&A advisor. So that's on the regulatory side of it. So I look at that as kind of like a backstop, right? Like that's a way of saying, look, we have a great defense if, as we go into our offense. And then from an offense perspective, as an investment bank, we have the ability to structure these transactions in any way imaginable, right? I mean, there are a tremendous amount of capital approaches that you can take in a transaction. I mean, if you want to raise capital, there's a variety of different ways of doing that where you don't have to register the securities to do it, where you can go out there and do private placements, for instance, right? We can go out there and get investment to come in. So we can look at a variety of different ways. If one owner says to us, look, I want to stay in the business, and the other owner is saying, I want to get out of the business, right? And the other owner is willing to roll in some of his equity, or they're willing to bring in another investor that's more of in a general partner capacity. We can structure those transactions for them, and we know how to do it, right? So I think there's a competency in terms of all the different avenues we can take from a capital standpoint. And then there's the security from the standpoint of, hey, what happens if the regulators show up on the door, on our doorstep?
That makes sense. So, and not like there's any regulation in healthcare.
Not at all. I mean, just,
yeah. And then the other thing is, as an entrepreneur, I can just tell you, it's like, oh my gosh, my joke is, I tell my wife and family this, like, one more thing for me to worry about, right? Like, really, do I need anything else to worry about? Not really. No way. Excuse me. So, one thing that, in working with so many, sort of advisors in this category, terms get thrown around a lot. We don't have to go over them all today, but the one that's, I think, most relevant, you mentioned, and you may have even said this, small to mid-market. What does that mean? Like, well, how does that break down when you're thinking about business size, essentially?
Yeah, I mean, there's a sort of more common term like SMB, or like small to medium-sized business community. I would say we operate more in a more financial tranche term of lower middle market. So like mid-market transactions are probably going to be reserved for mid-size investment banks, right? And that's the kind of transaction where you walk into a room and there's 20 people in there, right? And a lot is there's a lot that's sort of boilerplate about those transactions, and there's a tremendous amount of resources where the transaction is going to be conducted really by numerous different people, right? We're focused more on the lower middle market. So I mean, ranges would be, someone that's generating $2 million of EBITDA. So the cash flow proxy that we use is EBITDA, and that 2 million to roughly 10 million of EBITDA. That's kind of a range in terms of lower middle market. Usually you don't see businesses that are making more than 100 million in top line in the lower middle market, but there are situations where there's low margin businesses like pharmacies, where you might see a lower middle market business of 250 million, right? But I mean, these are very tight margins on these businesses. But that's a sort of, I'd say that, those bookends are kind of, 2 to 10 on the EBITDA side of it. I'd say, anywhere from 10 to 100 on the top line. So that's a financial standard.
Yeah, that's helpful, I'm sure, for a lot of the audience that may not be talking to investment bankers and PE guys every day. And that was great. So, there's been a lot of the news about, there's a lot going on today as we're recording this podcast, and we're seeing some of the disruptors are pulling back in the market, Walgreens, Walmart, at the very high end of the market. You've got change, you've got labor shortages, for, providers specifically. Interest rates went up and sort of shocked the market, a couple of years ago. When I go to PE conferences, like we attend or speak at things like McGuire Woods or McDermott Will and Emery's conferences in the spring. There was a lot of pessimism last year and deals at least slowed down, but I'm not expert at this. You are. So where do you think we are today and where do you see the trends are for people contemplating? And does timing even matter for if you're thinking about a transaction? Like tell us about the environment, I guess, and what you're seeing.
Yeah, I mean it's challenging, to not talk about the news cycle, right? When,
Yeah.
we're trying to maintain, this lane of being apolitical or not getting into what's happening, in terms of the systemic environment, right? But the reality is that, I mean, as you said, I mean, this what's happening right now in our country is this huge like sea change. And what's interesting to me is that you look at something like the equities markets, right? And those equities markets, they make up such a small portion of the larger capital markets, right? I mean, debt is so much bigger, right, than the equity markets. And then you start talking about currency markets, right? And really what's happening is that the currency, the reserve currency for the world is still the dollar. That has given a lot, that has put a target on us in terms of the investment capital internationally, right? So people want to put dollars into the US, right? And that doesn't look like it's going anywhere, right? Now
Yep.
you have these foreign conflicts and all these things where you see other countries try to club together, their currencies or trying to create other economies, and they're failing miserably because the one thing about the United States, and it's on our currency, is that there's trust, right? Is that that the dollar, you're going to wake up tomorrow and the dollar is going to have value on it. And it's interesting. We started with Latin America. That's the biggest challenge they've had is that when I grew up and when I was going down there, I mean, you would literally see menus that didn't have prices on them because they would have to change the prices every day, right?
Wow.
And now you see inflation, the way that it's gone up, uh, and a lot of that has to do with policy. And so, whatever your opinions are, like bottom line is that has a lot to do with policy, whether it's, on energy policy or trade policy or whatever else. And so that inflation goes up. And then what happens is that's a tax on everybody, right? So we know that from the standpoint of the individual. But what happens is that in the capital markets, you start to have to catch up. The cost of capital has to catch up with that inflation. And so one other thing that occurred was that the way that we print money in this country is through quantitative easing, right? So we basically create these bonds, right? And once that inflation goes up and the debt rates go up, these bonds become worthless. And so a year and a half ago, you saw it, maybe a little bit long, maybe a little bit less than that, but you saw a regional bank in Silicon Valley Bank, that was acting like a hedge fund because they were dealing with free money for so long. So you had regional banks acting like hedge funds. Now, what's happened? We've lost so many regional banks in this country in the last year and a half. Regional banks is where our buyers would go to get their money to buy these businesses. Those have dried up. So now it's these large primary banks that are lending. They're not going to lend for anything that's less than a certain amount, which goes way beyond the boundaries of what we're dealing with. So a lot of it's private capital. And yeah, look, I think that as you start to look at the news cycle and decisions that we're making right now in the political sphere, those will definitely play into how transactions happen because in the last 18 months, the transactional activity has gone down tremendously because cost of capital has gone up and the banks aren't lending. We lost the regional banks. And now you've got groups that are private lenders who are actually giving significantly better terms than the banks because the banks are amortizing these loans, right? So they're putting the interest rate in there plus the amortization. So you might get rates in the double digits from a bank. Whereas a private lender will say, hey, you know what? Let's not amortize this. We'll just give you the loan for a certain rate. So you might get in the high single digits with them. But still, Stewart, that's I mean, we're talking about going from 5% on a private loan to, 10%. And, that's, I mean, you can see how like the debt markets are going to destroy. So now, as you talk about the equities, going back to your first point about, okay, well, how are these companies restructuring? Well, the equities markets uh, are sort of existing, I think, outside of the boundaries of traditional economics right now. And the thing is that you've got a lot of folks that are investing in these companies, uh, but there has to be a point at which the bottom drops out of that. I don't see where I don't know when it will happen, but you're right. There's these corrections that we're calling them. There's got to be a point at which these corrections happen that falls in line with what's really happening in the market, which is that the cost of capital is so high, and it's causing there to be an inactivity in these markets. So that's sort of where we are with it all.
That makes sense. I could see if the cost of capital becomes higher, the multiples, I'm assuming, get impacted as well. So there, are you seeing a lot of people that just sort of might have been able to or wanting to sell now backing off, or does it depend a lot by sector too? Because I've been told that, and again, I'm not the expert you are, but different sectors have more elasticity based upon, some of us have evergreen sort of demand, others are definitely impacted more by various events. What are your thoughts there?
Look at there are different types of investors, right? So there's going to be those who will come in and be happy with the income that they generate from the investment. That doesn't tend to be who we're working with on the buy side. So on the buy side, we look at it in two categories, right? There's a strategic buyer, right, who is essentially the larger company that's doing the same thing that the selling company is. And then there's the financial buyer, the one that's going to come in, create a portfolio, consolidate other like businesses, and then have a larger business, a platform company that they end up exiting, right? On the strategic company, evergreen, right? I mean, from the standpoint that they come in, they buy, they integrate the company, the operations. They probably don't bring in management teams. They have everything that they have in their SG&A. They use that, and then they increase market share, right? And they're more interested in sort of increasing patient populations, recruiting personnel, and growing the top line of their business. So really, the difference there is that if you sell your business to them, it's no longer there. That business is completely gutted, right? That business doesn't exist anymore, right? It becomes this larger business. Now, on the financial side of it, you've got the investors that will come in and say, look, we want management teams. We need you guys, right? And they'll give them some piece of the pie to go back out there and continue to grow their business. And then they'll integrate other businesses in there that make it more profitable, right? And they'll start to centralize some of the fixed costs. But ultimately, when they create these portfolios, they have to sell those portfolios. And where we are right now is that there are a lot of these funds, right? They set up a portfolio in the form of a fund. So they go out there and raise a whole bunch of money from these, limited partners, right? The general partner, who is the private equity firm, ends up getting the capital, the committed capital. They build a portfolio around a certain concept, right, around a certain platform in healthcare, and then they go back out and sell it. Now, they have to satisfy the expectations on returns for those limited partners within a certain period of time. And that period of time, because there was so much consolidation activity that occurred 5-7 years ago, right? That period of time is now. And so we're all of us looking at it going, okay, well, when are those folks going to come back in? And some things that have happened to keep them from coming back into the market, that those financial buyers, has been that they have bought the portfolio back, but with another fund that they created, right? So they bought their own portfolio back. It was bigger. They bought it with another fund. They allowed them to exit from from their LPs, and they brought new LPs in, right? So that was one thing we've seen happen in the last 4 months or so. Um, and a lot of it's just they're just sitting and waiting to see what
Right.
happens. So we think that there's going to be a huge boost in purchase. We thought it was going to happen this year, but we think there's going to be a huge boost in those lower middle market acquisitions in 2025. And there's one other piece of this, which is that if we can represent a seller, they'll see that, look, we're going to go after a variety of different targets, but a lot of sellers are apprehensive to go in the market because they're hearing all of this in the background.
Right.
Hey, I'm not going to get the multiple that the guy I know that sold the same business 2 years ago is going to get. And look, there might be some truth to that, but at the same time, there's always someone out there that's willing to pay more because the synergies on the business are so good. And so we say, look, if you want to sell, let's take a look at the business, see what we can do to get it ready, and let's go out there and test the waters. But I think that it's coming from both ends. You've got apprehensive buyers and apprehensive sellers, and that's what's really creating a stagnation within the M&A activity.
That's great. So, and I have, again, just from talking to people, I hear about, and just exactly what you just said, but there may be the right buyer who's like at the right time. So you have to balance that with the broader macro economic sort of forces. But I'd like, what you brought up something a couple of times, and let's talk about preparing for exit. So there may be people on the call, podcast rather, that are thinking about, okay, I'd like to sell eventually, maybe, next year, maybe in 5 years, even 10 years, like what target am I shooting for? Like, what are the kinds of things that, you know, um, and I know this is going to vary a little bit by vertical, but beyond just EBITDA, right? Creating profitability, but what are the other sort of classic five? I have my own opinion on this, but you again are the expert. But from your point of view, I'd love to hear what the sort of classic things they want to see over and over again that you see.
Yeah, look, well, as much as a business owner, wants the operations to be the main event, look, the financials are, at the end of the day, like our report card is the financials. And what the counterparties are most interested in seeing right away are those financials. And I will tell you, like, there's part of it that's, very technical, but there's part of it that's performative too, in the sense that, like, if the financials are garbage, right? If they're not well organized, if they're in a cash basis, and there hasn't really been effort put into, looking at the business from that perspective, and managing from that perspective, then that's not going to play well with buyers. So we always emphasize financials fast. We say let's, if you don't have them, let's get them in place. Let's go out there and get resources. So there's many CPA firms that understand the difference between tax accounting and this sort of GAAP transaction accounting that we want. And we say, let's get them in here. Let's clean this up and let's look at that. So number one is financials. And one thing to note on that, Stewart, is that when I say cash versus accrual, you have to understand that the buyer is going to look at is going to do an accrual methodology when they do their analysis on your business. So you might as well come in with that as a starting point, because they're going to bring in what's called a quality of earnings team, or they're going to do a study around quality of earnings. And when they do that, what they're basically doing is making sure that your accounting is on an accrual basis, and that everything that you have put in as an adjustment on your EBITDA. So let's say that you're passing personal expenses through the business, or that there's a spin-off of a business, or there was CapEx, or there were investments that were beyond the scope of the operations that you funneled through the business. They're going to look at all of that on their own. So we might as well do that on the front end, right? And so that's the big part on the financials. The next thing I would say is, look, let's make sure that from a compliance standpoint, that the operations don't have any risks associated with them. So I'll tell you, we represent healthcare businesses, right? And you can reimbursement risk is enormous, right? So we want to make sure, hey, look, we're doing everything on the charting when we intake these patients, all the clinical components of how a patient is handled, all that's done properly. And then we also looking at the personnel, right? And there's teams that you can bring in as well that are consulting teams that will look at the operations from a clinical and from a labor perspective and make sure, okay, everything here is solid. Maybe there's an opportunity there to make more money on reimbursement. Maybe there's an opportunity to be better in terms of the patient care or be more efficient in terms of labor costs when you do that analysis as well. So that's a spin-off benefit. But I would say that you have to be focused on making sure that there isn't some kind of risk in there that the buyer is going to discover in their due diligence that's going to either kill the deal or greatly reduce the valuation.
Yeah, that totally makes sense. That's interesting. It's that on the provider side in particular, you've got HIPAA leaks, you've got, malpractice, ugly cases that can be true or not, like, suing for, wrongful death or sexual harassment or something. And, sometimes there's, um, you know, really, really bad. And sometimes it's just bad timing and the wrong person drawing a lawsuit. But there's all kinds of risks like that. And I've even seen lately a fair number of respected institutions publicly paying fines for Medicare violations, and that's got to be a real chill because
It's
that's a brand killer. If
Oh,
you're if,
completely.
like,
I mean, and you
yeah,
see how, look, these quasi-government structures, like the Medicare reimbursement program, right? I mean, there's fraught with activity that's, fraudulent, right? I mean, my yeah, my father, when, I was heavily focused, when I was putting my heavily focus on healthcare, roughly a decade ago, he would he would call me up, and there would be in the Miami Herald, there would be an article every day about how there was fraud in healthcare. And, look, those stories resonate over time. And, the OIG and the government and, they start to say, hey, look, we got to look at this issue. And partly, I think that there's a virtuous component of making sure the patients are taken care of. But I think also the government realizes, wow, we've been giving a lot of money to certain operators, and they're limited, but it's a big dollar amount, and they have to go in there and make sure that those folks are being penalized for their untoward behavior. So I think that there's definitely an issue around how you're operating your business, and that's the thing is like when you talk about HIPAA, right, or you talk about healthcare laws in general, everyone's breaching something, right? It's a question of what are the material breaches versus the sort of immaterial ones. And I think that as we look at material adverse effects on a business, we want to go in there. We want to do those assessments early, right? Because it might be something that will take us a year to turn around. I don't know what it is, but I mean, I know that, in industries, there's labor, there's payments that have to be done, like when there's withholdings that have to be done, and they have to be done properly. And maybe there's something within your labor that you don't even know you're doing wrong, but you're doing it wrong. And like, that's the kind of stuff that would keep me up at night anyway as a business owner, but it will definitely be what destroys a deal if it's discovered by the counterparty.
yeah. Well, it's funny I mentioned earlier, like, what's something else for me to worry about, right? So
And
the
that's, by the way, can I just say one thing on that, Stuart? Like, I am not a worry monger. Like, the last thing in the world, like, it's kind of funny because we started off by talking about compliance and regulations, and we're talking about healthcare laws now. And I will say that we're deal makers, right? Like, we really want to focus on the commercial provisions of these contracts, right? Like, we want to make these businesses uh, perform at their highest value. So, but the only reason I bring up this other stuff because, again, it's like a backstop. If you go into a transaction and you've got a valuation that valuation is based on the business running on the up and up, right? Making sure that there's no risk factors for these buyers. The minute a risk factor is discovered, it will diminish your valuation. So I look at it as I'm not a fear monger. I'm not someone that lives in the theoretical. I live in the practical. I've seen so many deals have a price adjustment as a result of something that was happening in the business that we just weren't aware of. And that's why when we get involved immediately, we say, let's take a look at the financials and let's take a look at these operational, the operational compliance that you have, again, as it relates to your patients primarily. But let's look at that so that we make sure that when we do value your business and we go out to market, we're not hit with a curveball that, that either decimates your valuation or destroys the transaction.
So another question on it's sort of related, thinking forward, going forward. So, and this is I'd like you to expand on some of these ideas. So some of the things that I was joking about earlier that I just sort of heard along the way is for example, particularly on the provider side, like professional management team, revenue cycle management. I always argue oftentimes marketing can be a lever for that. But going back to certainly in healthcare, it's an evolution, right? So if you're looking on the provider side, when I'm talking about providers, I'm talking about groups or multi-location businesses or whomever, to that evolution from, sort of democracy with a few providers who started to professional management. How important is that? And like, do they look at the management? And then also going back to, everybody, you mentioned earlier, the financials matter, but like, they just want to make sure we're getting paid. So do you have any thought and anything else that you think is just sort of key drivers if you're planning? So again, amateur me, I would say if I was looking at a group like that, I'd want to make sure that if I'm planning on selling in 5 years, that I have, a management team I can brag about, and I have proven economics. But help me think that through a little more.
Well, look, with what you do, Stewart, I mean, that when you're working with management teams, you're driving the top line, right? I mean, look, in any business, right, it's push that top line, control costs, right?
Yep.
And you want to, when a buyer, they want high operating leverage, right? So they want fixed costs to be where they want to limit the variable costs, right, to what they need them to be, and they want those fixed costs fixed, because once you start to get that top line up, which is what you do, which is what you bring to the table, right?
Sure.
Like I'm just bringing more money here, right? Like I'm going to bring patients. I'm going to make sure that you are getting the recognition, and you see that from the volume, the revenue generated of the business. So as that goes up and those fixed costs stay at the same level, right? That's your margin, right? Like that's your money right there. And so, I think that when you talk about management teams, look, there's certain, I mean, like the horse and buggy wasn't going to beat the car. But I believe that if you put a management team in place that is solid, that understands the mission, and that they will they make all the difference in terms of whatever the product is or the service. And so, yes, management teams are vital. Management teams are vital to making sure that we're focused on the fundamentals of the business and that those fundamentals are being addressed. And we spend a lot of time with counterparties, with buyers. We spend a lot of time with investors looking at the management team of the selling company, because most investors do want that team to transition, especially in that financial category. I would say that it's virtually every buyer wants that management team to come forward. And one of the elements of the business that they're most interested in is making sure that that management team transitions, because they're the ones that potentially have the relationship with the contracts.
Right.
They're the ones that are leading the personnel, right? And as you touched on this a little earlier, but the personnel, right? Like the massive resignations that have occurred over years, like personnel in healthcare services is obviously the most important asset you have, right? In many ways, buyers are buying people when they do these transactions. And that personnel, if led by a good management team, is going to be much more loyal, is going to be much more efficient, and they're going to want to continue to work with that company for years to come. So, I think when you talk about revenue cycle management too, and you're also looking at technologies, right? And management teams that leverage technology for the success of their business are also, using best practices and are also very effective too. So yeah, I mean, management teams are vital. The thing is, I can't really. That's a tough one for me to say. I need to prep on the transaction because either you're good or you're not. I mean, at the end of the day, I mean, I can't. I really can't. I mean, I don't. There's a big thing for us, which is that we hire based on soft skills. We hire based on character, right? I can teach someone all the technical stuff, but if management teams come in and they don't, like, I don't know, maybe they're defensive, or maybe they don't even know what's happening in the transaction, right? But I can identify because the owner is not informing them, right? Or maybe the owner is part of the management team and he's doing something that's, not appropriate, or there's something that's happening that they've been doing for years, but they could change. If they don't have the ability to do that in the right way, if they don't have that leadership capacity, then it's difficult for us to get into that with them on the front end, right? It's kind of binary in that regard.
So this is I mean, there's so many things that it's not realistic in a podcast to cover every variable. I guess, you mentioned this earlier too, in terms of for somebody thinking about this as it relates to my company specifically, right? If I'm a listener, it's like, well, what about my company? I could see why, you'd recommend they just simply call you or somebody else in the field because like there's a lot of variables here, right? We talked about some of the big ones. We talked about some deal killers, surprises, clearly can kill deals. Obviously, negative news can kill deals. But like in terms of, like I guess I'll put out a hypothesis. You tell me what you think. So what I've seen or noticing is that if somebody comes to you and comes like, we're kind of thinking about this to have sort of a longer term view. Like, is it because I've noticed that the best investment bankers in particular are the ones that have a long term view. Like they're not looking for like trying to convince someone to sell the first phone call they get. It may be, these relationships may last for years before it comes time to write. But what else would you say, I guess, if, do you agree with that hypothesis? And then do you have any other tips for somebody that really is looking for success? Anything else that we talked about what doesn't work? Like what other things would be, positioned for success? And, like if you had, a few minutes to give people advice on how they're going to eventually be successful and happy with the sale of their business, things to do, things not to do, the floor is yours. What do you think?
Well, look, I completely appreciate the fact that it's all about relationships, right? And that these deals and transactions, they're all rooted in relationships. They're rooted in trust, and that doesn't happen overnight, right? And so, I mean, I can't tell you how many transactions uh, came about because I had a conversation with someone a couple years prior, and they just said, I wasn't ready at that time, but what you said or what the conversation we had, you didn't pressure me to move forward, and I just feel good about this relationship, right? And doing this. So those elements matter, and we look, we genuinely care. It's such a benefit that we're working in a segment of healthcare where people got into it for all the right reasons, right? I mean, they didn't start as executive level people. A lot of the founders that we represent, right? They got into it because they care about patients, because they wanted to help people. They wanted to make our health system better, right? So those are I mean, that's just a benefit for me. So I like these conversations that I have. As I talk to folks about what they want to do, I think the biggest piece of advice I have is that you can't do it alone, right? You need someone else with you as you start to contemplate this exit, right? And I mean, it'd be the same as if you were like, you can't develop like a trust or an estate without having the right types of consultants in this. And this could very well be the biggest component of your estate if you're, looking at your portfolio, right? Your personal, your assets, and you're looking at this. And it might be a group of people, but it's safe to say that that someone's business that they own probably represents the biggest component of their portfolio. So you should start having conversations immediately and understand that if you bring in a specialist, you trust them, they have a good track record of getting these types of transactions done, then allow them to walk you through a process, right? Don't take this position that what you want, right?
Yeah.
And you know how to get there. Because I'll tell you, that's another thing that changes all the time. Someone will call up and go, because their only frame of reference is a sale, is a transaction. But someone will call up and say, but I want to be involved, but I don't think it's possible. This is where I want to be. I want to be 10x. I don't think it's possible. And we can have a conversation with them and say, look, based on our experience, this is how you get there. This is what you can do. And again, no pressure. We want to we take the long view, and we believe that if you start having conversations about this now, you're going to be prepared for whatever eventuality you have. So I guess, Stewart, I mean, it's pretty simple, but it's just, pick up the phone and call us if there's something that is going through your mind in terms of raising capital. And we talked about this too. I think that was off the call, but we were also talking about how, just because we gave you these ranges of money and just because we did all this doesn't mean that you won't be in those ranges when we do decide to sell your business, right? And so we would just say, if you're listening to this, don't preclude yourself again because of assumptions. You have to go into these things sort of tabula rasa and say, hey, this is what I'm thinking. What do you think? And then let's have a conversation about it.
That totally makes sense. I guess I'll leave with this one thought, and we can certainly talk offline again, and maybe have more podcasts in the future. But what I've seen from this, because I'm working in this space again with a fair number of private equity and investment bankers, and being a business owner too, I have friends and colleagues that are at various stages of this process. And the one conclusion I've had after many conversations is, one way, and this, I'll see if you agree with this, Andre, is like having a business that people want to buy. When you get to that stage where it's something that's really sexy, it's also a good business to have. Like, in other words, if you say to yourself, like from a buyer's point of view, I would say, well, I want a strong management team, and I sure don't want that everything to be based upon one individual, which can often be a deal killer, right? So like if you're the entrepreneur and everything's based upon you, that's going to scare away investors. And also it means that you have a really horrible life probably if everything in the company goes through you. So getting to the point where, we have predictable, I always talk about on the marketing side, predictable, profitable, and passive revenue. That's part of like what our company does. We try to like, in addition, because, part of our story when we get quoted in this world is always about, like I would say that, private equity or investors are talking about revenue cycle management a lot. They talk about, contracting, the management team and all those kinds of things. And I would always argue that marketing is an X factor that most people underestimate wildly. Because if you can have predictable, profitable, and passive revenue, then it's like, wow, that's sexy. Because you're going to, if you're going to invest $1 and get 5, I'll do that. I'll invest 5 to get 25. I'll invest 25 to get 125 or whatever. So that's a thing. But again, at the end of the day, if you have like where the business truly is a business and the accounting is really working right and the management team is really strong and the customer service is good and this, the satisfaction of the customers are good, all those things the buyers want, it's a whole lot more fun to run that company, right? You know what I mean? It's like, so for anybody that's in that sort of category of thinking like, well, we don't have all those things, it's a worthy goal to me, even if you're not thinking of selling. Like, let's say you've been in business 5 years and you're thinking 20 years out. It's like, well, whether you're selling it or not, I still would want all those things. I'd want predictable cash flow. I'd want to have a strong management team. So those are basic fundamentals. Curious if you have any thoughts on that, but that to me is like, it's a lot more fun to run a good business as well.
Look, I mean, it doesn't come down to, I mean, this is sort of that that philosophy of like, look, I have my own business, but am I essentially like self-employed, by that business, and is that business running me? Or do I have business systems in place where I'm enjoying what I'm doing? I'm not getting caught up in the minutia. I mean, it's so much of what we deal with owners is that they want to sell because they are just so frustrated, right?
Yeah.
I mean, they got pressure from the top. I mean, the reimbursement is going down, in something, or there's a new law that's coming in, and then they've got it coming from the bottom up with the personnel, and someone called off sick and they've got to they got to pick up the call at 2 o'clock in the morning, right? I mean, those kind of things. But I think that speaks to the idea of, look, what are your business systems? And when you talked about, we talked earlier about management teams. Look, you have to understand that you're going to be so much happier when you are delegating these responsibilities. And look, yeah, you're paying more for this, but you should be making more as a result of it as well. Marketing is an interesting one for me, Stewart. We do, if we're not executing, we should be marketing, right? Like as a business too, right? Like we're constantly prospecting. We're constantly using like uh, the best practices for inbound marketing, right? Like we're always doing. I mean, this is a marketing. This is what this is right now that we're doing, right? We're sort of using the most modern form of going out there and thought leadership and talking about ourselves, and trying to bring people to the table. So we understand marketing. A lot of folks look at marketing as a line item, and they're like, well, when times are rough, they cut that away. I tend to think it's the opposite, right? And I think it's the opposite too when it comes to your management teams. When times are rough, that's the time to really push for your management teams. They're going to look at it both from the level of like they care, that you care about them, right? That, hey, look, I'm not taking you away, I'm not putting you into the fight and tying one hand behind your back. I'm putting you in the fight. I want to make sure you understand I completely back you, and we just have to go through and work through these systemic issues or whatever it is. And so I agree with you. You really have to make sure that as an owner, you are running a business that that has systems in place that allow you to enjoy what you're doing, right? Because if it's just about the money, and if it's just about like, you know, the idea that that you need to do it because of the people within the organization, that's just not going to end well. It's just not going to end well, and it's not going to give us a compelling story in the market. So, I think that what you're saying is, they should hire both of us immediately.
Exactly. That's fun. No, it's funny. I got to admit, I've noticed your marketing, and it's funny. There are companies out there in your sector that, certainly do things. They're very respected and they're great, but there's some that do really leap ahead faster by doing good marketing. So I got to give you hats off for that. And because certainly there's no shortage of competitors in any category, including investment bankers. And the marketing part is so, maybe we can finish with this thought and then you can give your spin. But, we do a combination as an agency of outbound and inbound marketing, just kind of constantly, which is, why we're of the scale and of the expertise. Because in order to have a really good company in our category, you have to have scale, because you can't attract talent if you don't have it. All the best people are all expensive, just without a fail. So, the marketing is really important. But I think for the purposes of today, it's that reputation you're building for inbound, where people call you and they feel like they already know you. And so things
Hmm.
like you're doing a podcast today, I often hear people call me. It's like I've had, this sounds silly, but fans. Like I haven't had somebody who came from Australia to see me speak. She'd been eating up my material for so long and quoting me. I said that. Well, that is smart. So, anything you would say for the investment banking side, insights that might apply to our audience that you've learned about marketing? I'd love to hear any thoughts on that. Like, what's worked for you in your marketing?
Yeah, look, well, video is enormous, right? And you know, I watch my son who works with a YouTuber, and I mean, they drive, you know, like views that you and I could only dream of, you know, tens of
Right.
millions of views on what they do together. And I just see the power of being able to, you know, watch someone who's an expert in their field, who can provide me insights. And, you know, I think that there's nothing more powerful right now in terms of getting your message out there than video, right? Being a thought leader, getting your message out there. I think content too is very important, right? And again, it's thought leadership through content that actually benefits the reader, right? I mean, it's not self-promotion, but it's content that you're putting out there so that someone can make a decision about you. Interesting statistics. I mean, it's something like the majority, some, you know, like 60 to 70% of people make a decision as to whether they're going to hire you before they even get on a call with you, based on what they've seen on your website or what they've seen out in the market. I mean, that's powerful, right? And that's music to our ears too, because the days of, you know, the cold calling and the prospecting, which we still utilize, by the way, we still do
Yeah.
that,
You need
you
both.
know, but
Sure.
those days are limited because of the power of content creation and the power of video and the messaging that it affords us. So I would say those are, you know, for us, those have been very, very popular, very, very productive and effective. And then look, I mean, at the end of the day, like the biggest marketing is results, right?
Yeah.
So for us, it's about we getting transactions are very difficult to consummate. You know, I can't stress how challenging it is. And so when you get them done, you really have to promote them. And so, you know, there's a cycle around success and promoting it, but promoting it properly. So when we, you know, again, using video, using thought leadership, what we do is we create case studies around our closed transactions. And then we walk someone through, obviously maintaining, if we have to maintain anonymity, we will. Usually we're allowed to broadcast, you know, certain aspects of the deal, maybe not the valuations, but we go through, hey, this is what happened in this transaction. And this is where, you know, this is where we can avoid these pitfalls going forward. So again, but I think it comes back to content creation, thought leadership, and utilizing video to convey that message.
Great. All right. Well, thank you everybody for listening. This has been really fun. I've had fun working with you, Andre, and hope we see you in the world out there multiple times. Thank you,
Thank you
everybody.
very much, Stewart. I really appreciate it. What an honor to be here with you, and I really enjoyed it today. We went well over time, so but I didn't feel it at all. So really, really appreciate it.
Yeah, great. Thank you.